Hey everybody, welcome to Trading Capital. It is April 21st. I'm your head market analyst here. Jumping right into the charts, I just want to congratulate all the TC members today. We closed a phenomenal day, 4 swing trade winners today. Starting with Alcoa. Alcoa had a massive drop today. Alcoa on the day was 16.94% down. Look at this sell volume, negating all of this price action until you pretty much had this breakout candle over here. That is an impeccable move to the downside. Even with a beat on earnings, but a miss on revenue, this stock once was a powerhouse and no longer. And we covered our short with a beautiful over 11% gain. We actually rinsed and repeated Alcoa 3 times during all of these choppy periods here, and finally I think this is now the nail in the coffin for Alcoa. It's definitely not going to make new all-time highs. That being said, notice the support where you've come into. So you've had this channel, this multi-year channel since January of last year, and as price hit the top of the channel, you've pulled back to the bottom, to the top, to the bottom, to the top. So you were able to play this channel several times until you broke out above it, and this was obviously the aluminum commodity shock that took place. But now notice where you dumped to. The top of this channel also happens to coincide with a 1, 2, 3 pivot low support now, as well as these pivot lows in here. So you are into major support for a stock that was a powerhouse for so long. Alcoa, certainly you could see a potential bounce. What I suspect is now making a bear flag pattern. So, you could potentially have price action chop this way and this way before breaking lower. So that's ultimately what I think is going to happen with Alcoa, is you get a small little relief bounce because it dropped to 17% in one day, and then I do think you make lower lows. But congratulations on shorting that and covering that today. We certainly need to use these rallies and these falls to accumulate cash. And that's the beautiful thing about trading, is we're all in to accumulate cash, because once this market does bottom and economic policy switches to loose stimulative policy, that's when you start having your big accumulation positions starting to pay off over the long run. Looking at X Steel, what a phenomenal drop, down over 6.07% on the day. Again, I think this is one of our most clinical technical setups that we have basically had in, this is one of my favorite trades that I executed basically over the last couple months, and not for the 11% gain that we did, but just the overall technicals. So looking back here, we ran into some major long-term resistance. We had a major trend line connecting a 2011 pivot high, 2018 pivot high, 2022 pivot high, which is this down-sloping orange trend line. And then you also had this double top scenario, all these resistance points up in here. Plus, you hit the monthly resistance on the 200-day moving average. When you flip to, we're on the daily chart right now, but if you flip to a monthly chart, the moving average was just right up here, the 200-day, when we executed our short. And then to make things worse is that when you actually flip to the weekly time frame, you had a time count of 10 weekly green candles in a row. And that's where we executed the short. Pretty much nailed the exact top at 39.20, and we banked an 11% today. Now, do I think this stock could potentially come a little bit lower? I certainly do. I think you can come into these support zones here. But that being said, the commodities and the inflationary shocks, you could have these commodities spike again on some sort of news catalyst with Russia. So the commodities are a very tricky play, shorting them. I tend to want to just grab my profits and run. A beautiful 11% cash, and I can look for new opportunities, and certainly ones that favor the risk to reward ratio. So congrats on a beautiful 11% there. We also closed our Newmont. Look at this Newmont drop. So this supports our thesis that gold is getting extended, and usually miners lead the actual bullion metals itself. And notice this topping doji candle up here. It's not a complete topping tail, but nonetheless it is sort of a reversal sign, one that traders need to be aware of. Distribution was happening there, and obviously at that high on the chart. More distribution occurred to the downside, more selling was occurring. But look at the resistance you also ran into. Trendline 1, pivot high to 2007, 2011, 2022. Trendline 2, 1981, 1996, 2022. So when you have two long-term trend lines intersecting with every different point and meets today, that shows that there's tremendous amounts of resistance there. And look at the support zone that we came into, pivot high to pivot low, and that's where we unloaded our Newmont short. Do I think you can actually come down to this gap fill? I certainly do, but gold has been getting bought up very quickly. There's a lot of buyers since everyone has been analyzing the long-term cup and handle formation that is potentially signaling a breakout. I do like gold longer term, but I still think it needs to have one final flush before the bull market ensues. But beautiful, beautiful cover on Newmont Mining. And then I guess the final trade was covering our SLV, but we'll go over silver chart on another chart. But we also banked, nothing too shabby, nothing to scream about. A nice, just a little over 4% on silver. I do think silver has a little more downside, but again, we want to accumulate cash on these bear market drops and these bear market bounces, because ultimately we're not sticking in really anything for too long, unless it's a quality name that gets demolished. But even then, I do think stocks head lower as Apple still needs to go lower, Amazon, Google, Microsoft, Tesla, and that will ultimately bring the indexes much, much lower, which will put pressure on the rest of the stocks, even if they are beaten down. So congratulations on all four of those winners. It's very, very good to bank winners consistently, and today we certainly had our fair share of winners. We were also very, very active today in the market as we banked profits. We're looking at new opportunities and ones that are going to put our capital to work again. So new opportunities where the risk to reward is in our favor. So right away this morning we shorted Nucor Corporation, NUE. And there were, first we just inched in a little bit, but one of the reasons why we shorted this, and it was one that we were discussing, but here you have a trend line, pivot high to pivot high to pivot high, and nonetheless this stock is extended. It did report earnings, so that's why it had this little bit of a pop, but I think it is completely extended. I mean, if we go to the weekly chart, this thing has also gone pretty much parabolic straight up, and I do think it has some sort of mean reversion back down to potentially these moving averages or this pivot high at first. So we pulled the short on Nucor. It came right into our resistance level, and we had a few positions here. We shorted up on these green lines. We were going to short at 190 if it pierced through again, but nonetheless our average is 183.21. So we're already in the money, and now I'm going to recommend that you put a stop to protect that. We never want to let the trade go against us. So we're in the money now, about 3 or 4% just from today. Look at that, 4%. Beautiful, beautiful, beautiful. That's why you love the technicals. And when you look at the intraday action, this is not healthy, this drop. I mean, sure, it's still in an uptrend and it still has this green candle, but the fact that you've had this massive tail, now there were buyers unloading into this beautiful, beautiful volume spike. So Nucor, my target on Nucor is potentially somewhere in the range of this pivot high here. It may coincide with somewhere on this trend line over here. So, potentially we could be looking for another 10 to 12% gain on that trade. Quick and easy, that could happen in a day or 2 days. I mean, if we look at the move that it had, it rallied up on the day from this candle. It rallied up 10%, and it only finished the day up 3.75%. So that means it reversed 6%. So let's just say we're up 4% already and we have another 6% downside. Boom, there's our banked winner. So be prepared. Earnings is wild, but there's tons of opportunities if we're nimble and smart and using the technical levels. What else did we do today? Let's take a look at Facebook. Facebook, we're starting to accumulate a small position. So right now we have our average at 191.14. So ultimately, if we go to the weekly chart, Facebook has been decimated, one of the FANG stocks, one of the most unloved FANG stocks up until Netflix just took that spot, so which we'll touch base on later. But notice how we're coming into the support, pivot high to pivot high to pivot high, breakout zone, tagged the pivot line, bounced, and now you're coming back into that support. So the question is, I do think Facebook makes lower lows and potentially comes down to this 171 area. But notice that trend line. This is going to be a powerful trend line to watch. Pivot low in 2015, pivot low in 2018, pivot low with the COVID low. So ultimately, if this flushes down in here, which it's about another $15, $16 off of Facebook's, we will certainly be looking to add and increase our exposure. That's going to be a tremendous technical level. But in the event that Facebook bounces, because it had a pretty steep sell-off today, down over 6% on the day, I wanted to make sure I had a little bit of exposure in case this does start to bounce. Now, I have no problem if Facebook continues to drop. We have a very, very small position. It is a blue chip tech stock that I'm prepared to take up to, anywhere in the range of 6 to 7% of my portfolio. So we have plenty of maneuverability room to add, but nonetheless, Facebook was getting trounced and demolished once again. Now down from the highs. If we take the high back in September of 2021, Facebook is now down 51%. 51%. And this leads me to suspicion. We're starting to see one FANG stock after another. First it was Facebook that got demolished on this earnings report back here. And now it was Netflix. It's like the Federal Reserve have a kill switch for all the FANG stocks. Which one's going to be next? I'm in the camp it's probably going to be Amazon, and then Google, and then Microsoft, and then Apple. That's how I fare. But we're heading into earnings next week, so anything could transpire. But nonetheless, these valuations are sweet. You should be drooling over these valuations. Even if they can go lower, these valuations and these share prices make absolute sense. We're pretty much negating the bubble that we caused. If you look here, we're trading below the 2020 highs right before the COVID crash. Now this is where the artificial stimulus began, right at this pivot low, but nonetheless you can assume that we are pretty much have eradicated the COVID bubble that we started for the last 2 years. So it's just very interesting to see how these stocks are so oversold. We also shorted Altria, MO. Let's flip back to the daily. Again, I gave everyone the sell target, a Pierce of 56.78, which just so happened to be this double top once my chart loads. So this double top here, charts in an uptrend are always looking to make a higher high. So on a technical basis, I was assuming that this would come up to this area because it was such a strong name and there's so much value hype around it. And nonetheless, it still is a strong name. I figured that it would pierce this high, completing on a technical basis, making a higher high, and that's absolutely what it did. We issued an alert to short this stock, add to our short again at a Pierce of 56.78. We did a Pierce of 56.85. That's where we got filled. You could have potentially got it all the way up to 57.05, so another 20 cents better. But nonetheless, it's brought in our average sweetly, around 55.49. So where do I think we have downside pullback to? I think we flushed down to this level. That will be your first support. And again, once we flush down to that level, that'll be a beautiful 5%. Ultimately, just depending on how bad the markets get, I think you'll have support at the 50-day, but I do think you go test the 200-day and ultimately the bottom of this channel at some point. So just keep that in mind. We still have room to add to Altria. If it goes higher, I'm going to have to crunch some more numbers and where I would consider adding to my short again, but we have tons of maneuverability, but pretty great short so far. Just the fact that it did pull off. It's acting exactly how it's supposed to be. I would have been concerned on the bear, since I'm on the short side, I'm favoring more of a bearish downturn on the stock because it is kind of overbought and extended, and its valuation is trading more like a tech stock versus a value play. So if it does start to rally, we'll certainly increase our exposure. But from the bull side, you would have wanted to see a close above this all-time high if this stock was going to potentially have a higher probability of continuing its upside momentum. So I was watching carefully, and we did not get that close above the previous all-time high. So what does that tell me? Well, one of two things. It could be potentially a false breakout, and secondly, if it is a false breakout, then this stock is going to head much, much lower. We also bought STNE, Stoneco. Beautiful, beautiful. Just look at this chart, people. So I start salivating when I see a stock that has a good company, good cash flow, great balance sheet, not going out of business. But when they're down from the high, all the way at 94 down to $9.56, that's a 91% drop. So we're starting to accumulate this stock once again, and we played it for this bounce, but we're starting to accumulate the stock from 90% down from its highs. And the first buy order that we issued here was right at this technical gap fill. We closed slightly below it. We're right around 9.59, I believe I issued the alert. But nonetheless, it's a small starter position. Notice how this stock has just had this nasty sell action. I do think it's a strong potential to come test the double bottom zone. We will certainly be a buyer. We will certainly be a buyer. The fact that this stock is down 91 or 90% from its highs, you have to understand how the percentages work in terms of when this stock does catch a bid and a bounce. When a stock is down 90% from the highs, look at this bounce, 84%, and it's still down 84% from the highs. So wrap your head around that. If you don't understand how percentages work from the peaks and how percentages work from the bottoms, you really need to brush up on a little bit of your mathematical statistics there and percentages. But essentially, when a stock is completely this oversold, it allows a tremendous bounce to occur, and I certainly think we're going to get that. I think the low for this stock is in. If you notice the volume candle here, 70 million shares. We've never had a bigger volume candle on this chart. So it makes sense that this bottom will hold, but you usually come and test a double bottom on a chart before making a serious move to the upside. So hold on to your hats. This is going to be a high flying one. We're just slowly accumulating at the technical levels. But when a stock is down 90% from the highs, it doesn't favor much more downside. Okay, just keep that in mind. Another play that we did today was SoFi. We added to our SoFi. Now we have 2/5 of a position accumulated. We still have another 3 add levels. Our average right now is around 710. But notice SoFi again. This is where you really need to start accumulating at the lows of the charts. When this chart was trading at 24 and even 28 up there, and now it's down to 660. This is the part where you slowly build up a great position at key technical levels and put yourself in a comfortable average that when this bounce does occur, you're deep in the money. And what I've noticed is that every time you get to a certain oversold point, which is you can easily measure the distance from the 50-day to your lowest point on the chart, which has happened here once, twice, 3, 4, 5 times. You've had these oversold bounces, and massive bounces are they. We had a 28% bounce there. We had a massive bounce here, a 45% bounce there. The most recent bounce was 30%, but all the way to the high 37%. And the beautiful thing is that when you actually calculate the average that a stock is down, it's roughly in around the range of 30 to 35% from the 50-day moving average. So when you calculate this stock is now well within that oversold range to when we've previously seen the 5 previous bounces occur. So it stands to suggest that this stock, perhaps once earnings season is over, or perhaps if the markets get a little bit of bid, that this stock could rally significantly. It could have a tremendous bounce, and putting us in the money, in 1 or 2 sessions, we could potentially take profits on SoFi. So I love SoFi down at these levels. I do think we're going to have a very similar situation here, where you have to be ready for this bounce, because these bounces happen quick and ferociously. Just look at the power of these impulse moves. Once they start reversing, they are tremendously powerful, and that's why we accumulate slowly, build up a beautiful core position with a nice average, and then let the stock do the rest. But I love these downside price action moves that continue just bleeding lower and lower and lower, especially at the lowest point on the chart. Let's jump into Netflix, shall we? So Netflix on the daily basis, absolutely demolished. I mean, when you had the earnings report that occurred here, you had hedge funds, CNBC analysts buying all in around here, making buy recommendations, and then look what happened. Boom, another gap lower on earnings. But this is where I'm more of a logical person. As much of a technical analyst I am, and I always trust the charts before any news, before any fundamentals, because essentially the charts dictate the price action and where the trend is likely to head. I've traded on fundamentals and I've been wrong. A company could be showing the strongest balance sheet, the strongest growth potential earnings, blah, 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 and the stock share still goes down. So I'm big on technicals, but when you analyze why Netflix dropped, it's mainly for a couple reasons. One, obviously they gave a nasty forecast in terms of what they were expecting moving forward. But when you look at the main reason, it's obviously the 700,000 users in Russia, and then 2 million potential losers not renewing their membership in Q2. So the markets have reacted significantly. Obviously Netflix is down tremendously, about 70% from its highs. So when you break it down, 2 million subscribers that haven't lost yet, that Netflix have not lost those subscribers yet. They're just forecasting that they potentially will lose those subscribers. So when you ask yourself, how does Netflix know they're going to lose those 2 million subscribers when they haven't actually canceled their memberships yet or their subscriptions yet? Obviously the 700,000 in Russia is easy to account for, but the 2 million, how do they forecast that? And honestly, it's a guess. It could be completely way out of left field when you have analysts expecting a build of 2 million subscriptions and they're forecasting a loss of 2 million subscriptions. You have this crazy range. Who's right? I mean, it's a forecast. Forecasts can be wrong. So let's assume that, they do lose their 2 million and the markets have corrected, overreacted. When you look at how many subscribers Netflix has, they have 222 million. So let's take away 2 million. That's still 220 million. Roughly, Netflix would lose 1% of their subscriber base with their latest forecast. And that 1% of their forecast roughly equates to about $22 million a year in subscription revenue. And potentially a little more in terms of the ad revenue that they make. But let's just call it, say, 20 to 30 million that they lose. Their stock just shredded 50 billion in market cap. Does that make sense? To me, it doesn't. To me, it absolutely doesn't. Netflix is not going to be a blockbuster. They're not going out of business. They still have so much value content. They're the biggest streaming company. They're the blue chip of streaming companies. And that's what their primary focus is, on building quality content. They have so much content. And at these lows, this is the accumulation zone. This could potentially be one of the best buying opportunities for a FANG stock, down 70% from its highs. And just notice the sheer sell-off. You've gapped down. On the gap, you broke the COVID low, you broke the October 2019 low, and then you also broke the 2018 low. You broke three major support zones in one fell swoop. It's just tremendous how the markets react so quickly these days. And obviously you had the main hedge fund, Bill Ackman's hedge fund, dumping 1.1 billion in Netflix stock, taking a loss of 400 million. So I think he was not smart to do that. Ultimately, when he was recommending Netflix as a buy up here, and now it's all the way down here, and they're crucifying it on CNBC and all the mainstream news platforms, saying that it's uninvestable, it's the new blockbuster going out of business, that just makes me more bullish, because you have these same analysts giving buy recommendations for Netflix up here, and now look where the stock is. it's significantly lower. It's about 40% lower from their buy recommendations, 55% from Jim Cramer's recommendation. So when they were telling people to buy up here, and I hope a lot of newbies didn't buy up here, but they definitely suckered some in. Now look where it is. Now they're saying that don't buy down here. Well, this looks like a way more attractive valuation than the one that they were originally saying down there. So I have to think logically and trust the valuations metrics, trust the fact that Netflix losing 1% of their subscribers isn't going to, shouldn't tank their business by 50% or what 40% to fall. But nonetheless, markets will price in the worst case scenario, and I kind of think it preps Netflix to have a blockbuster earnings next weekend or next month, or sorry, next quarter, potentially in July. So with the fact that they gave such a bleak forecast, we still have to remember Netflix has 222 million subscribers times their subscription rate each month. They are generating money. It's not like they've hit a major supply chain snag. Russia could be their so-called supply chain snag. But let's assume that Netflix, gets the Russian people back online because tensions ease. That's 700,000 people that come back online. B, let's assume that the 100 million people, the 100 million households that are using someone else's Netflix subscription to watch shows without paying, let's assume they take that away and they capture 2% of those 100 million. Well, there's your 2 million subscribers that they're forecasting to lose that they've now captured. And frankly, my family also uses a subscription, a Netflix subscription that isn't ours. It's shared by a friend. And I've had it for years. It's just transferred over every time I've moved houses and lived. It's just never ever, my friends have never signed out. They never changed the password on me. I've always had access to it. So potentially when Netflix changes that and doesn't allow multi-households sharing one subscription account, I will most likely buy a Netflix subscription. And I think it's going to be very easy to capture 2% of those people that they are forecasting to lose. But I think if they capture 2% of the 100 million that they're currently losing, I think that's a very conservative approach. Let's say they capture 10%, then they all of a sudden have more subscribers than they have ever had, but at this low valuation. Just think about that. If they somehow get a few more million subscribers over the next couple months, they will have more subscribers than they did at this point in time. But look at the valuation, 70% lower. So to me, it's a no-brainer. Start accumulating, start accumulating, start accumulating. Something else we can touch on here is, I'm just scrolling through. I think we've touched on most of the additions and sells that we did. CVX, X, I'm just scrolling through my list here. Okay, yeah, so that's pretty much that. So just to keep in mind, this next week is still going to be volatile. As the likes of Facebook and names continue to sell off into earnings, I love when a company sells off before earnings because it takes the expectation down, and they don't have to report as strong for the stock to into earnings, because the stock is sold off tremendously. I mean, just look at this pivot high. Facebook is down, 21%. That's an exceptional drop in basically a couple weeks since the start of the month. So I love it when these blue chip companies sell off before earnings, because it often suggests that they're going to have a pop on earnings. And what we've seen in Netflix, we saw a rally throughout the whole day. It was up 3 or 4%, and then earnings came and it shredded it. We saw Tesla falling. It was down, 5 or 6%, and then earnings came and popped it. So the price action, when a stock is rising into earnings, what we've seen is they often get shredded, and then when a stock is falling into earnings, they often get the extra boost up. It's because that expectation of the company doing well is already mitigated. When a stock has fallen 21% heading into earnings, how much more can it fall? And when you're already at a major support levels, with additional support levels just a little bit lower, the expectation isn't as heavy on the company to do well. Let's say Facebook, reports strong earnings. This stock could pop significantly due to its oversold nature. So earnings are wild. Earnings are fun as a trader. Use it as an opportunity to accumulate, but don't try to front run a stock. Just accumulate at key technical levels and let the charts guide you. Let the technical analysis be the guide to the profits. Don't listen to any of the FUD, the news that's going on out there, companies missing, companies hitting. Ultimately, it's going to be the technicals that dictate how the companies do. So I think we could potentially see some sort of a bounce in Facebook going into earnings. Even if we don't, we get a small little flush, we will start to accumulate more and more and more and more because this name has been absolutely beaten down to a pulp. That being said, thank you all. Congrats on